What's up, family? Welcome back to J Trading. It is Jupiter again. I'm back with another video. We have crashed 300 here on a 4-hour time frame. If you remember, last time we were in a trade over this area. As soon as price broke below this box, we got kicked out. Our stop loss was just below this wick over there. But unfortunately, after retracing back to the box area, price fall a little further, killed all the stop losses. As we have discussed, this kind of area is called the liquidity area. By the way, if you understand liquidity a lot, you can be an absolute beast in forex trading, crypto trading, and all these financial institutions which are trading, like fund managers and banks. They all understand liquidity. So if you understand liquidity, you'll be ahead of all these institutions. By the way, this is a very crucial point. You have to dig deep into liquidity. You have to understand where liquidity is in the market, where liquidity is being taken. So most of the time, even though crash and boom assets are algorithmic trades, there are market makers behind these algorithmic assets. So what they do is usually they spot areas where traders will be taking a lot of trades. So any type of area that's just below or above that key area will be very important for the market makers, because the psychology of people is that they will identify key area like this. As you can see, we have you have the first reversal here, the second reversal here, and the third one here. As you can see, these three reversals are almost at the same level. So what we do is, usually as a trader, we spot these kind of same levels and we put lines over there or boxes like this. So I'm a trader, I'm a human being, so I spotted these three reversals, I put box over there. So what I'm going to do next time is, whenever the market or the price falls back to this box area, I'll be taking a trade. Definitely I'll be waiting, right? Because that area is key area. There has been a lot of decision making over that area. So next time, traders will be selling or buying over here. Most traders, there are two types of traders, right? There are traders who buy at the support area, and there are traders who wait for the support to be broken and sell over there. So people, as soon as price breaks below this box, they'll be selling. Breakout traders will be selling their positions, and the other traders who buy at support area will be buying over there. You know what that means, right? That's called liquidity. There is a lot of liquidity in the market. A lot of people are taking positions. There is a lot of money in the market at this area. People who have been waiting on the sideline from here to here, they will enter into the market at this area. That's definitely truth, right? That's a fact. So as soon as sellers and buyers jump into the market, there will be liquidity. There will be a lot of potential in the market. So at that time, who else steps into the market? Market makers step into the market. So what they do is, they try to see all the stop losses, try to hunt them down. If you have bought at this area, definitely you'll be putting your stop loss just below this box and you'll be killed. Mostly, usually that's what happens. I'm not talking about what happens 100% of the time, but most of the time there will be wicks, there will be manipulations, there will be a lot of volatile price action movements. So that price action movement will wipe all your stop losses here. What does it mean? That means people who bought here, they got killed. So as soon as the market breaks below this, there are traders who trade breakout. So those breakout traders will step into the market and they will sell at this area as soon as the price breaks below. Again, another decision making will happen. The market makers try to push the market above the box area, so that the people who have been selling below this box will be swept out of the market. They will be killed. The stop loss will be here swept. So we have sellers and buyers killed at the same time, at the same position. Who else is left? Nobody is left. Only the big players and the institutions and people with money left. There are some people who buy here and will not put stop loss. Since they have money, they will not put stop loss, right? Yeah, so if you're not putting stop loss, nobody's going to hunt you down unless you put your stop loss just below the box. So those big players and the sharks will remain in the market, and price goes in the same direction that you anticipated. If you can see here, this red arrow, this is the arrow that we put last week, a week ago. Price was here, so we said, yeah, the price will go below the box, swipe, kill all the stop losses, all right, push all the traders out of the market, and the price will go up. Fortunately, we were in the trade, but unfortunately we got killed also. We got pushed out of the market and price went up. Look at this one, how beautiful it is. Imagine you bought here and you hold all the way up. That's a lot of money. But what happened is we got killed at this area. Guys, welcome back again. If you are new to the channel, please consider subscribing. Otherwise, we do analysis every day or twice, maybe 2-3 times a week sometimes. Yeah, so keep in touch, tune into our channel. Every time you will see analysis like this. Today I want to share 2 trades that I'm currently on. I'm on boom 500 and crash 500. You can see I bought boom 500, a lot of positions. I took the trade twice actually. If you can see here, we have $777 profit and the others are $118. 5 positions, all of them are in profit. You can see I'm on net $182 profit. If you go down, you can see I have another 2 positions on crash 500. First time I sold, it is on negative $69, and the other time I have 3 positions, negative $7. But I think usually I'm going to be in net positive. Still now I'm in net positive. It's $216, but with the commission and with the spread difference, I'll be in net positive gradually. Boom 500 is already paying off, but crash 500 is in negative. But I think gradually I'll be on blue on this one also. But let's see what's happening on crash 500 first. Okay, if you remember, we did analyze this one also last week. Crash 500, you know it is trending up since months, maybe a couple of months, starting from May. The market or the price has been pushing up and up and up. You can see here there are runs and pullbacks, runs and pullbacks, and runs and pullbacks. So currently the market is on a pullback. So what I did was I put a trend line over there. Last time I told you if the price reached to that trend line area, I'll be taking a buy position, right? So what I did was I drew, there was some kind of pattern here which looked like flag, and it was near the trend line. My trend line was around this area. I can add another trend line here. If you can see, we have another trend over there. That one also can be a trend line in a lower time frame. So I drew a flag over this area like this, and if you remember in last video I said this is a bullish flag. Market has been pushing up and up, creating higher highs and higher lows. So whenever it creates patterns like this, that's called a pullback, where the market takes a little bit of rest, and after breaking out of that pattern, the price continues going up. So that's why I took a trade over there. You can see here I have a couple of positions on 1.2 lot size. Again, the price fell below this area. I have identified this reversal over here. We have another 2 weeks, we have 3rd week here. So I connected all those weeks together, and I said, okay, if the market, the price falls below this area, I might add another position at this area, because we have a trend over here. It is a confluence zone, and we have another confluence zone on the left side here. If you can see, we have a lot of rejections. First rejection here, second one here, third one here, and we have a 4th week which went all the way down. But we can consider this area as a confluence, because this confluence zone, it coincides with the trend line. So this area will be important. I can put a circle over there. Let's put a circle so that you can see the thing clearly. This area right here, yeah, I hope you see the circle. It is first time for me drawing a circle over here on MT5. Yeah, I hope you can see it now. Let's change it to fill and color, maybe light blue like this. Yeah, so you see this area, right? You see the circle. That area, it is an intersection area with this box, with the yellow box, and with the trend line. So that means we have 2 confluences joining at the same area. So that means whenever price falls to this area, that means there will be a lot of pressure, there will be a lot of decision making. That's why I took another trade over there. We have a trend line and we have a box over there. As long as price holds above the trend line, we are safe. So I took a trade over there. I added more positions on 1.5. I was sure, so I added my lot size to 1.5, and I took a couple of more trades over there. So as soon as I took a trade, price started bouncing up, and currently I'm on profit. That's what's happening right now. So for you, if you're late to the party, maybe you can wait for the price to go a little bit up and come back down. Maybe we can go down to maybe 4-hour time frame and see what's going on. Yeah, so currently look, the price looks like this. You can see here a lot of junky candles. They all look like the same. We have green, we have red, almost the same size, then up, down, up, down. All these candles are happening at the same area. That means the market is consolidating right now. There is no momentum in the bullish side or bearish side. So the price might break below this box area and fall to the trend, go down to the trend, or keep going up, pushing up like this after breaking out of this area. So this area is very important for you. If you wanna jump into the market, maybe wait for the price to go above this area, this consolidation zone, wait for it to break out, take a trade over there, and you can target this area here. We have a confluence over there, a reversal in a trend line, so we can take a trade over there, take our profit over there. That's what is really happening on Boom 500. The last one, which is Crush 500, I'm currently on negative, but I think gradually it's going to pay off. My stop loss is just above this week over there, but let's see. If you remember last time we analyzed this one also, right, on a line chart. Let's change it to line chart actually. So if you change the chart to line like this, you can see obviously where the reversals are. The first reversal here, the second reversal here, and we have price over there, but there was no reversal. So we put a box over there connecting this reversal and this reversal right here. So what we did was we waited for the price to bounce from this area, and if you remember, we had a trade over there and our stop loss was just below that box and we got kicked out. But fortunately, you can see market went all the way down to this confluence zone, to this reversal, and got reversed up. So yeah, right now the price is near the box area. You can see this box area, it has been acting as a support over here and resistance over here. Currently it is acting as a resistance, so the price is trying to break above this. But if you change the chart to candlestick, you can see there are a lot of rejections over there. Let's zoom in a little bit. So you can see here the first rejection, price came back to the box. Since the box is key area, price got rejected. Remember, this is daily time frame. This kind of wick is very important. It shows that sellers are very strong in the market. We have another rejection here with a red candle. We have another rejection or a wick with a red candle. Then we have a green candle, but still there is a big wick over there, right? So currently price is trying to push up, but as you can see, there is a lot of selling pressure in the market. So what I'm anticipating is, currently if price holds like this, if market keeps creating wicks like this, maybe gradually the price might break below this trend line, this blue line, and the price will fall, because there has been a lot of selling pressure over here. You can see a lot of red candles on a daily time frame. That indicates that in a longer term or in a higher time frame, the market is trending downward, and we have a triangle over here. You can see this pattern is a triangle over there, right? So this triangle is a bearish triangle, which is a confirmation of a continuation of trend. It is confirming that the trend that was previously on, which one is this is a bearish trend, that will be continuing. That's the meaning of a trend. That's the meaning of a triangle, which is being formed at the middle of a bull or bear run. So right now we are on a bearish market, and we have a triangle that indicates that the market might fall below. I might be wrong, we'll see, but most probably this is what I'm anticipating right now, and I think the market will fall below the triangle, and my take profit will be at the bottom of the triangle. I'll be taking profit over there. That is it for today. I guess there is nothing new. Maybe Boom 300. Yeah, Boom 300, I told you last time, there is a triangle over here. If price breaks below the triangle, it will fall. If it breaks above the triangle, it will push up. As I said, it is pushing up. I'm not taking any trade right now. Maybe I'll take a trade when price reaches to this area. I might sell over there, but for now I'm not taking any trade. Guys, thanks for tuning in. Drop a like button. I'll come back with another video. See you next time. Bye. Adios.